Hello, good day to you all. Yeah, welcome to my YouTube channel once again. I thank God that you're here, even to watch this. I believe that at the end of the day, you will advance your knowledge on what we're about to talk about, even at this particular point in time. Now, we are looking at partnership. We're looking at it for the past few editions now. So today we are moving forward. We're still going to be talking about partnership. And today we just want to see how we can put everything together. We want to make sure that at least we have a full glimpse of everything so that we're able to know how to solve questions that might arise, as a result of, this particular class, this particular lecture, or any questions on partnership, as it were. So let's go ahead, even right now. Let me share my screen so that we can all be part of it. So today I'm looking at having an illustrative question that we're going to be solving, as it were here even now, and I'm going to be using Excel. So for us to even adapt whatever it is that we have to do this hour. So I have a question here, some partnership, a full question as, for everybody to consider this hour. So I know the time is still not there for us too much, and so we just want to quickly just run through. Now we have Amusa that partners dealing in fabrics and utensils. And now these are the details provided, for the year ended December 31, 2023. So we have the capital accounts, then we have drawings, we have purchases, we have the different elements, captured here in the account, all the balances of the last one that we have here, inventory, and the like. So that's what we have. Now we have the following information also given for the purpose of solving, this particular this question. So we have inventory as at the end, rates paid in advance, and the likes. Okay, so we also have, what are we meant to do? Prepare income statement for the year ended 31st December 2023, the partners appropriation account. Of course, in the last class, we dealt with appropriation account, basically. Then we're going forward now to talk about partners current account, again, to see how we can also bring it, together. And then we join it together with the others. And then we have similar financial position. This further statement of financial position is what we have here, as a matter of a statement of financial, position. That's what we have, there. So let's move forward. Uh, let's move forward. So I've also done a kind of a frame that I put together so that I'll be able to quickly finish solving this question. So we have Amsa as Salawa. All right, income statement for the year ended 31st December 2023. Okay, so that's what we have, there. Okay, so let's continue. Now we have sales figure. How much do we, let me put a Naira sign so that it's clear. Okay, so we're dealing in Naira. All right, sales. How much are we talking about? Sales is how much? 50, million. That's what we have, okay, as our sales figure. So I will just be running through it and then it's follow as appropriate. If you have comments, questions, just don't hesitate to put it, on the comment box. All right, 50 million. Now, cost of sales. We want to calculate the cost of sales now. Of course, you know that this is an interplay uh, between opening inventory, purchases, and closing inventory. So we have opening inventory of how much? 2.3 million. So I've gone there to locate it. Purchases, how much was purchased in the course of the year? 40 million. That's what I have there. Total. Let's put everything together, and then we arrive at the figure for 3 million, for 2,300,000. So closing inventory. Now in your additional information, you see the closing inventory there, and that's what we have here. First one. 2.5 million naira. 2.5 million naira is our closing inventory. So let's go, excuse me, let's go to our, this will be a less 2.5 million. So that's what we have. Cost of goods sold, we now have for 3 million, for 2,300,000, minus, let's just put the minus sign, negative sign. So that's what we are 39 million. 800. So what do we have as gross profit? Okay, what do we have as gross profit? Let me put, let me realign this and put the sign. That's what I mean. So we have negative in bracket now, negative in parentheses as well. So we're going to have the gross profit, which is going to be the difference between the turnover and what we have as cost of goods. So we have already have that. All right. So now, discount received. Okay, we have a particular entry there, balance there for discount, received. That's this here, 400,000. So come to discount received, 400,000, which is going to be an additional income, as it were, to the partners. So salaries. Let's go to our salaries and see how much do we have our salaries, 5 million, and general expenses. How much do we have our general expenses? 2 million, and then we have rates. Now, rates. Let's look at rates. We have rates of how much? Now, 100,000. But then, please, when you are solving question, you must also be looking at what you have as your additional information. Rates, the particular amount was given as rate paid in advance. So we're going to deduct 20,000 from the 100,000. So that will give us for rates, that's 100,000 minus 20,000. That will give us 80. Discount allowed. Discount allowed. We have discount allowed of 500,000. And then bad debt of how much? We also have bad debt. So let's go and see our other information. So additional information here, we have bad debt of 60,000, naira. So we're going to have 60,000 naira, here. Depreciation. How do we compute our depreciation? All right. Now, I don't want you to be confused at all, because I know that if you look at our depreciation, it says depreciation on furniture and office equipment is at the rate of 5% per annum. 5% per annum, on cost. Now, if you look at this particular transaction, you can see that there's a cost element, has been identified. Cost element identified as 3 million, and then here is the net book value. You can see that one way or another, we're not giving, the accumulated depreciation. So it's expected that you should be able to know how to calculate your net, book value. I will be giving your net book value, you should be able to know your accumulated depreciation. So now let's look at our depreciation, which is 5%. So 5% of 3 million, which is what we have as cost, times 5%. That's 150,000. Okay, 150,000. So how much do we now have as our total expenses? So let's sum it together. Okay, let's sum it together. And then we have total expenses as that. I think we need to just scrutinize it and check. Here is, okay. Now, bad debt is not 600,000, rather it's 60,000. Okay, 60,000, not 600,000. So that's what we have, there. So we have 7.79. Now let me try to put it in the right perspective. Now we have, so in present, so we have that figure. So let's look at our our net profit. So we're going to be adding the gross profit plus discount received, then minus what we have, or plus what we have, since this one's already negative. That's what we have there as our net profit. Profit for the year, which is also more good, it's the same thing, here. So we're coming out to the appropriation aspect now, which was dealt with in our former, in the last video. You must have watched it. If you have not watched it, then go back to place, check my page and check again. So we have interest on capital. How much is interest on capital? Okay, now we've been told that interest on capital is 10%. 10% per annum. 10% per annum. So for AMOSA, you need to find out how much do they have as interest, as capital. So so 0.10, okay, 0.1, excuse me. We go to capital, that's it. So times 0.1, that's 500,000. The same thing for Salawa. We move up to check the amount, and then 0.1, That's 10%. So that's what we have. So we're going to use to calculate everything together to have the figure to use. That's 900,000. All right. So interest on drawings. We'll also be giving, the figures for interest on drawings. So what do we have? Interest on drawings. If we look at our additional information, we have interest on drawings there. So for Amusa is 25,000, and then for Salawa is 30,000. Okay. So how much do we have? All right. So that's 55,000 plus, oh, sorry, that's 55,000. That's the addition of the two, okay, figures there. So let's go now and look at share of profit. All right, share of profit. Before then, let's calculate the amount of money that's available for them to share. So add this minus this, then plus this. So 1.965. So how much are they sharing to Amusa? Okay, of course, we know the sharing formula, okay, that we have. What's the sharing formula here? That's put it there. Okay. What we're going to do, we're going to do something here. Obviously now, thought I put it somewhere. Okay. Let's do it this way. Now the partnership act of 1890. Okay, partnership act of 1890 says that where there is no agreement reached, for the purpose of sharing profit, what must be done? You must share the profit equally. Okay, profit should be shared, equally. But as a matter of fact, there was a particular figure that I used before. Look at then. Let's look at if we're going to share this equally, what will it amount to? So this is what we have divided by 2. Now divide by 2, and then also here, come here. And so we're applying that rule of 1890 partnership act. So here we have, and then the figure as well. So we have done with the income statement and appropriation account as well. So let's go to the other aspect of our question. We're moving fast because of our time. Bear with me. So let's go and look at the other leg of this particular question. Now we'll be talking about, now I believe that you have been able to capture what they have a good understanding of what we have done thus far. So now let's go and look at current account for these people. All right, let's look at the current account. I'm trying to see how I can streamline my the whole thing. Okay, let's just move on. Okay, so now we have AMSA on one side, and then we have Salawa on the other side, and then of course the Naira sign. So let's look at balance, brought down balance brought forward for AMSA current account. If they have any, we'll see it there. If don't, then we'll move forward, and then we'll continue to just do what we have been told to do. So we only have capital accounts, there. Okay, basically capital accounts what we have, even there right now. And then let's just make sure that everything will be well, covered as much as possible. So it's important for us to take note of this. So that means that we don't have, current account, brought forward. So let's move on. Now let's look at other factors, other things that took place in the course of the period. Now we know that interest on drawing, 25,000 for and then 30,000 for Salawa. Okay, you have seen that here in this account, 25 and 30. All right. Now let's go to drawings. How much did they draw in the course of the year? For 400,000, then 300,000. So we have 400,000 and 300,000. 400,000 and then 300,000. Okay, that's what we have. And then on this side, okay, of the divide, we'll be talking about interest on capital. Interest on capital that was paid, okay, by or that the firm is supposed to pay, to them. Don't forget, we've calculated interest on capital here, 500,000 for Musa, and then 400,000 for Salawa. So we have 500,000 and then 400,000. Okay, that's what we have. Then share of profit. Share of profit. Share of profit. How much? We know that the two of them share the profit equally. So we come here to say 982, and then we also come back for the next person, Salawa, 982, 500. Okay, so that's what we got. Now let's add them together. Of course, the expected in the right side, is higher. So let's do summation of the two. So that's what we got. And then let's extend it to the left. Okay, let's extend it to the left. This one too to the left. So let's look at the difference. The difference will form the amount to be carried down. Okay, minus that one, and then minus 400,000. So we have a figure of 1.057 million. And then let's come back to Salawa minus interest on drawings, then drawings. And then we have 1.052, 500,000. So here we have this figure as brought down, and then we also have this as brought down. All right, so here we are right now. Okay, looking at the two things put together. All right. I believe we are following as much as possible. I believe we are following as much as possible. Okay, let's continue to look at the questions. Okay, so now we have statement of another position now to handle. Statement of another position to handle even now. Okay, now, so let's start. Statement of another position, freehold properties. Okay, costs. Let's go to our trial balance. Okay, trial balance, freehold properties, 5 million. So 5 million is what we have. 5 million. 5 million. Accumulated depreciation, is there any? No. Net book value. So if there wasn't a figure there, so what do we do? Add it together, and then that's what we call net book value. Okay, so let's go to furniture. Furniture and equipment. Okay, we have furniture and equipment cost. How much is the cost of 3 million? 3 million. So the addition of this will give us 3 million plus 5 million will give us 8 million. Okay, so let's look at accumulated depreciation. I said something earlier on that if you look at this, we'll see that yes, 3 million at the given as the amount, the cost, and then here we have 2. So that means that automatically at the beginning of the year, okay, the accumulated depreciation was 600, thousand, 600,000. But then in the course of the year, they added depreciation of 150 to it. So that means that depreciation will be how much now? 600,000 plus 150,000. So that's, no, sorry, 600 plus 150,000. So that's 750. Okay, so 750,000. That's what we got. Now let's bring it here now. What do? We're going to deduct, okay, 750 from 300 to be able to get our net book value. Okay, so let's add together. That's what we have now. Okay, for our non-current assets. So that's 750. That's 7,250,000. That's what we'll be able to get. So let's go and look at our current, assets. Current asset. The first one is inventory. So inventory at the end of the year, okay, as given in our additional information, you have it 0.5 million. So that's what we're able to put together. Then let's look at our trade receivables. Trade receivables, what do we want? How much do we have? We have 3 million there. Okay, 3 million. But should we use 3 million naira? Obviously, no. No, in the sense that along the line, the cost of the year, 60,000, was actually written off as bad debt. So we're going to be having 3 million minus 60,000. Okay, so that will give us 2,940,000. That's what we have. And then, of course, prepayments. What was prepaid? They prepaid uh, rates of 20,000. So we have prepayment of 20,000 on there. Okay, what about our bank? Do they have any bank balance? Okay, let's check bank balance so that we're able to know what to put there. Bank balance. Can you see the bank balance? How much do we have as bank balance? That's 1 million naira. So we're going to be having 1 million naira as our bank balance. So here we are, 1 million naira as a bank balance. So 1 million as a bank balance. All right. So what do we have all together? So total net current asset will give us this figure. Let me add together, or let me use the summation sign. So we have this. So that's what we got. All right, that's what we'll be able to get at the end. So let's add them two together. Here we are. Total assets will now be 13 million, 13 million 710. I believe we are following, okay, as much as possible. 13 million 710. So let's go to our capital account. Capital account. Okay. Capital account for AMSA or AMSA. Okay, it's 5 million. Okay. Don't forget, we have 5 million. So let me go to our trial balance to see where we are coming from. So 5 million here, and then we come back to go back for the other lady. Salawa is also 4 million naira. So you see 4 million naira for the 4 million naira. Okay, current account. So how much do we have now? 9 million. So we have 9, or rather, two of them 9. Current account. So let's go to our current account. Our figure for AMUSA, is on top. For AMUSA is this figure. That's 1.057. 1.057. And let's go to our Salawa as well. Is that same figure. Okay, so let's add the two together. What would that give at the end of the day? Let's okay, 2.11 million. That's what we've been able to get. Now let's go to our current liabilities. Trade payables, trade payables, trade payables. For trade payables, we have 2.6 million. 2.6 million trade payables. So we have trade payables of 2.6 million. We add that one to bring it, extend it to this side of the divide. Okay, you also have 2.6 million there. So now let's add the three together, and then let us see what we're going to get. 9 million plus 2.11, okay, then plus this one, 13 million 710. So let's look at our total asset. So total assets we have here. Okay, look at it. So 13,710,000 and then 13,710,000 naira. So that's what we'll be able to get. And let's look at, okay, let's format this properly. And so here we have this. Here we're going to remove this. No borders. Let's move the borders. Let's put the borders appropriately. Okay, here we have, okay, that's what we have. Then this one, there be no border. Let's arrange it properly, align it very well. And then we're going to be having, at the end of the day, a bottom border. So that's what we've been able to do for this season, for this hour, for us to look at. So that's the way to actually solve, any questions. I mean, that has to do with partnership. Now we have been able to look at it from the beginning to the end, from the income statement to appropriation to current accounts for the different partners. And then we'll also be able to pay a financial statement, that statement of financial position. And that will bring us to the end of, today's class. Thank you for joining once again. I believe that we have learned one or two things. Again, in addition to what we have been doing or we have sharing in the time past. So if you love what you have seen, and of course, and you desire to have more, and you are yet to subscribe, just go ahead, hit the button right now. Subscribe to this my YouTube channel so that when another video is dropped, you'll be able to actually learn one or two things again. So I want to say thank you for watching and thank you for being part of the class. So till I come your way again, I believe that the Almighty God will preserve us and keep us alive. Thank you very much once again. Don't forget to comment, to share, and then to like. God bless you. Bye for now.